At the start of the pandemic, when everything looked very bleak, especially for the economy, rural India was a silver lining. Not only did it seem more resistant to the first wave and a bit of the second wave as well, but consumption was robust. In part, this was driven because of the large number of migrant workers that chose to go back to their towns and villages. It's perhaps a function of that higher base that we're now seeing a slowdown in demand in rural India. There could be several reasons. One of them also is the spike in commodity prices, which is making it difficult to buy several items which are not really or necessarily essential. And the biggest proof really is the results that have been put out by one of India's largest FMCG companies, HUL, today. HUL has put out robust results in Q3, beating estimates in fact, but the commentary from the management shows that the dip in demand in rural India is definitely a matter of concern. Listen in to what Sanjay Mehta, CMD of HUL, said today.
When you have this kind of inflation, then the consumers, and certainly consumers who are at the bottom half of the pyramid, they titrate their volume because the money is limited. And they would focus on what is the most essential, and that's what they buy. And so from that perspective, clearly we are seeing now a slowdown happening in rural area from a volume perspective. Obviously, this would require putting more money in the hands of consumers. That's the best way to get the consumption going. And that would mean, I would believe that the government, the steps that they took in the last 2 years, many of those steps would have to continue. Yeah, even the Manrega outlay, the government should think about not only continuing, perhaps increasing it. Because at the end of the day, a large section of our population lives in rural area. And it is very important. And many of the FMCG products are basic necessities, right? So that indicates the purchasing power and the inherent strength of the rural economy.
To speak more about what is happening with rural India slowdown and why it's a matter of concern, I'm joined today by Sanjay Manyal from ICICI Securities. K. Ramakrishnan, Managing Director, South Asia at Kantar, is speaking with us on the show, and Mayank Shah from Parle is also speaking with us. Welcome, gentlemen. Thank you so much for joining us on the India Development Debate. Let me begin, Mayank, by getting your perspective. I gave a few examples in my opening comments in the show, and we're seeing that across sectors in FMCG companies as well. What has been your experience?
I've said this thing earlier as well, and even at the cost of being repetitive, I would like to reiterate that we need to look at rural demand right now in view of or through lens of what has happened last year. So the kind of phenomenal growth that we saw in rural, if we are talking about foods grew at about 16 to 17% in last year. On such a robust growth that we saw last year, we are talking about current numbers, and we should keep that in mind. Also, while we are comparing the rural growth of this year with urban growth, we should look at what happened in urban India in last year. If we talk about, again, going back to the food category, if we talk about growth in food category in last year of urban India, that was just merely about, 5-6%. And it was because of foods that we saw total FMCG, landing somewhere in positive territory across urban and India, urban rural India last year at about 2-3%. Now, on such a robust growth, if we are saying that there is a slowdown in rural, yes, it is. But we need to understand that we cannot expect a growth of 16-17% year on year. So yes, there is tapering of growth. And there are some signs where we have seen that, because of tapering, the demand is not to the tune of what we expected. But we would not really, or I would rather not say that that's really a big cause of concern, given the situation and given the growth rate of last year.
So you're talking about the foods categories specifically, but if I look at things like fertilizer sales, if I look at things like two-wheeler sales or tractors, etc., which also had a robust growth, but we are seeing a consistent slowdown. Two-wheelers actually never really recovered broadly. Ramki, what would your inputs be here across categories, and what could be some of the reasons we're seeing? Is rising prices of essentials one of the factors?
Okay, so in some ways I would agree with Mayank, what he spoke about earlier. One is, first let's talk about the FMCG lens. In the FMCG lens, if you see, I think we're talking about growth slowing down we have to look at the base effect. I mean, like 2020 was a phenomenal growth year from the point of view of FMCG, whether it's urban or rural, and more so in rural. And on top of that, we are seeing a growth which is not in line, and so therefore we are thinking we are probably concluding that it's not as robust growth, etc. That's one way to look at it. The second way to look at it is the rural has more of a disturbance than otherwise. And what is that disturbance? Like, for example, a whole lot of rural India across the country has been the governments have been giving away free products. Particularly, let's say, wheat, atta, and staples and things like that. And you will see that the FMCG basket is about 75% foods. And within that, about 30% is atta and wheat. So a lot of things being given free tends to, I'm talking about 2020 and then going on from there. So those giving stuff free tends to disturb the basket a little bit. So therefore, people buy something more, something less, so that disturbance exists. So from a point of view of all the long-term parameters, whether it's monsoon or whether it's employability or whether it's support prices or anything, we have not seen anything significant for us to say that there is a cause for us to be concerned about rural India. So there's a disturbance, yes. On the top of a very strong base, the growth is not robust enough, yes. But is it something to stay? Is it something that we should be superly concerned about? My answer would be, I would rather say that not. I would allude to what Mayank said to say that it's more of a disturbance. I understand the two-wheeler story, etc. But like you rightly said, it never really recovered from where it went. And there are several other theories about the two-wheeler story and not just about the rural demand per se. So fundamentals of rural have not changed. I have no reason to believe that rural is in a state of worry or collapse or anything like that. The fundamentals are still strong. And I think it's only a disturbance. That's my view.
Okay, so rural demand has slowed down, but you're saying you're not overly worried about it. Sanjay, what is the perspective that you would bring to this question? Because now you have the demand of an increase in something like Manrega, and we know that the government has been pumping in a lot in Manrega. You have now the demand that let's increase not only the output or the allocation to Manrega, but even the number of days that we give. Clearly, there is requirement for support there.
Yes, thank you for inviting me. Yeah, so as you mentioned about the Narega here, yes. So if you see the base effect, obviously it was very high, as the other two panelists have also mentioned it. Coming to the Narega part over here is Narega actually was revised, almost like twofold, compared to the budget in 2020. And that was one of the major reasons why rural growth was very high. Despite the fact the Narega number is high from the actual number, it is still below the revised number of the budget in 2020. And that's one of the reasons probably the rural growth might not be as high as it was last year. The other concern, what I would see right now here is that the huge commodity inflation across commodities, and whenever the commodity inflation is so high, you see that the rural growths deaccelerate, whether it is down trading or so there was a last 5-6 quarters we have seen there was a shift from the unbranded to branded consumption. Probably because of the high commodity prices, there would be a pause in a sense in that rural demand, and that probably is one of the reasons why we probably have seen the deacceleration in the growth rate of rural India consumption levels.
Okay, Mayank, let me come back to the last story over here, and let's not get into semantics about whether we should be concerned, very concerned, less concerned. The fact is that rural demand is slowing down. Commodity inflation could be one reason for it. Base effect is definitely a reason for it. How long do you see this trend lasting, and how crucial is it for rural demand to also bounce back from the perspective of FMCG companies?
Well, as far as it being crucial is concerned, it is very crucial. I think if we are talking about the growth of FMCG, I think largely going forward is going to be driven by rural India, be it penetration or be it consumption-led growth. That's where, growths are going to come from. So it's going to be very, very crucial. And as far as, consumption or demand tapering is concerned, I would not attribute it so much to inflation. Yes, it does play a bit of role, but consumers are relatively rational and they are getting more rational with every passing day. So when they see the commodity prices rising, when other things are getting costlier, they understand that the brand that they are buying and the inputs which are going into them are also getting costlier. And when you talk about, inflation affecting the demand or input cost affecting the demand, it would be, largely relative, because consumers are going to look at that commodity or that brand and its price in relation to other substitutes which are available. And when you are talking about those substitutes or competition of that brand, inflation is common for everybody. So if we look at the price hikes, it's not just within one brand or one company, it's across companies, across brands that we are seeing the price hike. So we are then talking about a new level of prices which are going to be prevalent in the market, and hence, and consumers, as I shared earlier, are rational. They understand when they see, commodity prices. So to my mind, it's not so much about, inflation. Yes, it does play a role and there would be some impact, but I would not really attribute, impact of inflation as much as one may think. Going forward, what we feel is the factor that would decide probably growth in the rural demand would be the outcome of monsoon and, the kind of agricultural yields that we would be getting going forward. So since we still largely are dependent on, agriculture as far as rural India is concerned, that would be a major factor. And I'm confident primarily because, if you look at the government stance, the stated stance of the government is to double farmers' income or farm income by 2022. So even government is going to support that. So given those factors, I am optimistic that, going forward, we will see, as Ramki just mentioned, the long-term story, of rural is still intact. And we will see, rural growing as we go forward. Yes, there would be certain factors which would be playing crucial role, and monsoon and, as I said, agricultural yields would be two important factors.
Yeah, that 2022 deadline is an interesting point that you raised, Mayank, because we're towards the end of January and in a time where there are 5 major state elections coming up, a budget just around the corner, so we will have to watch the space on what is done to boost rural consumption. But, coming to the point of impact of inflation, Ramki, would we be seeing that impact more on discretionary spends? So as you mentioned, the dal, atta, chawal is perhaps coming in for nearly free or at highly subsidized rates. But what about things like, toiletries or other products, your creams, those kind of categories? Will they have seen a bigger hit?
So if you see FMCG as a whole, it tends to be a little inelastic in the sense that, see, when you get staples free and which form a big part of your basket, there is a little more money available in your hands, which you tend to spend on things like toiletries. Of course, the extremely, discretionary ones, which are very high expense, etc., they will have a little bit of a struggle. But otherwise, overall, from the rest of the FMCG basket perspective, it's not going to be that elastic is the view that I have from the commodity price perspective. And secondly, the commodity price itself is a mixed bag. There are some commodity changes which are in favor of farming, which are in favor of agricultural income, which are in favor of rural, and some which are not. So from that point of view, I don't believe commodity inflation is going to affect FMCG in any major big way. I say that only because of the fundamentals being strong. The rural growth story is still strong. Like I said earlier, it's a disturbance, and the disturbance might take a little while to get out of. But I think I don't think the rural story is still not. It's wrong to say that the rural story is not there. Second, from the importance perspective, I think it's a moot point. I mean, it's an important sector for almost every business in India. I mean, the next growth is definitely going to be coming from there, and not just today. For the last 30 years, I would say. So, from that point of view, important, just a disturbance, but I'm sure they will get out of it because the fundamentals are strong.
What is the timeline of recovery that you see, Ramki?
I would seem to think not more than a couple of quarters.
Okay. Sanjay, do you second that we are looking at a recovery in the next perhaps 4 to 6 months? Do you think that are you foreseeing a big boost to rural consumption coming up? You have a big event like the budget and the focus could be there?
So yes, I think so I agree with the point that the 2 quarters would be largely the impact of the de-acceleration or the pause in the rural consumption or the a bit of slowdown in the rural consumption. It will not be more than that. Certainly, when the 4 state major elections are coming, and these are largely, if I consider UP, it's a largely agrarian state. So certainly, budget would be much more favorable towards the rural consumption. There's no doubt about it. There should not be any second thought to that. So probably will accelerate the growth maybe in Q1 of the next year. And so on, and by the time I think we will have the anniversarization of the slower numbers. Just want to clarify on that point. When I mentioned about the inflation, I mentioned about the fact that there has been a general trend of down trading whenever there is a high inflation, specifically in the rural areas. So those consumers who have been sort of consuming the products, not talking about the essentials, but some of the discretionary nature of products, they tend to downtrade a bit. Unbranded stuff or the regional brands or the local brands are the ones which are preferred at that time. So the bigger ones or the organized part of the sector probably generally see the slowdown, and that's what we have seen. Even in the today's number, you can see the actuals number, 2% volume growth. That can be attributed to that factor.
So, in fact, Sanjay, give us a bit more detail of what are those trends that you saw reflected in HUL's numbers today. We have a pretty strong quote from the HUL top management, and the urban numbers seem to have more than covered what the losses would have been on the rural side. But what are the insights which point to the story of a slowing down in rural demand?
So, I think what HUL number really pointed out to the two-part, I would say, the numbers is, so if you see the home care number is almost 23% kind of growth. The larger part of the growth has been driven by the prices because, again, the crude has been sharply up in last 1 year. And because of the crude prices, most of the detergent prices have gone up sharply. Simultaneously, we have also seen the base of, as the other panelists also mentioned, the base of the detergent or the home care businesses were very low because of the out of the home activity was literally restricted last year, and it has opened up now. So the growth has been jumped by both the low base as well as the pricing part. Whereas if you see some of the other segments like foods, again absolutely reverse of that. So probably we have seen some cooling of the tea prices, and that's what probably have been reflected in the single-digit growth in the foods part of the business. I think, yes, as I mentioned, that they have seen a 2% kind of a volume growth, which is slowing down, and overall the base was not that high. Probably the segment-wise bases were differing, but overall it was a 4% volume growth in the corresponding quarter, and a 2% volume growth over and above that. So certainly, this seems the slowing down in last few quarters what we have seen. I believe, as I mentioned, the commodity inflation plays some part of it. Some part with that there has been a shift from the organized to the unorganized, or the regional brands have taken place.
Yes, I mean the inflationary story is now a very well-rounded trend on every single item that you can think of, and it is going to hit demand at some level. Maybe highly discretionary spends will be curtailed, or a downtrade, as you said, would take place, and maybe that is some of what we're seeing in the mute demand of rural India. This might be a short-term trend, and that is really the good news. We'll have to see what the monsoons bring, because a robust rural demand is crucial to the economy overall, and of course several Indian companies. Thank you so much to all of you for joining us today.
Thank you.
Thank you very much.